Welcome everyone to SmallBiz Wiz, where business dreams take flight. Join me on a journey of entrepreneurial discovery as I unravel the secrets of small business success. From growth hacks and marketing mastery to financial wizardry and inspiring stories, my channel is your guide to navigating the world of small business like a true wizard. Get ready to conjure up innovation, cast spells of strategy, and enchant your way to prosperity. Subscribe now and become a small biz whiz yourself. So the topic for today is small business funding. It is August 28th, 2023, and let's dive into small business funding. So small business funding is the lifeline that fuels the growth, operations, and sustainability of entrepreneurial ventures. Whether starting a new business, expanding an existing one, or navigating through challenging times, access to capital is a fundamental requirement for businesses of all sizes. Small business funding can come from various sources, each with its own advantages, considerations, and implications. So, sources of small business funding. So, we've got personal savings. Many entrepreneurs begin by investing their own savings into their business. This provides full control over the business's financials, and it avoids taking on debt or giving away equity. And then there's family and friends. Borrowing from family and friends is a common early stage funding source. While this can provide quick access to funds, clear agreements and communication are essential to avoid straining personal relationships. And then we've got bank loans. So traditional bank loans offer fixed terms and interest rates. These loans often require a strong credit history, collateral, and a comprehensive business plan. And then we have Small Business Administration, or SBA loans. SBA loans are government-backed loans that provide favorable terms for qualifying small businesses. They help bridge the gap for businesses that might not meet the requirements for traditional bank loans. And there's venture capital. Venture capital involves investors providing funds in exchange for equity in the business. This is common for high-growth startups with potential for substantial returns. And there are angel investors. So angel investors are individuals who provide capital to startups in exchange for equity. They often offer mentorship and industry expertise along with the funding. And popular now is crowdfunding. Online platforms allow businesses to raise funds from a large number of individual contributors. Crowdfunding can be a way to validate a business idea and build a customer base. And there are grants. Some businesses, particularly those in specific industries or focused on social impact, may qualify for grants from government agencies, foundations, or organizations. And lastly, there are alternative lenders. So online lenders offer a variety of financing options, including short-term loans, lines of credit, and invoice financing. These loans might have more lenient requirements, but often come with higher interest rates. So some considerations and strategies. Business plan. A well-structured business plan is essential for attracting funding. It demonstrates your understanding of the market, your strategy for growth, and your ability to manage finances. And then repayment plan. So before seeking funding, determine how you'll repay the borrowed capital. Clear projections of how the funding will contribute to revenue growth can bolster your case. And then just diversification. So relying on a single source of funding can be risky. Diversify your funding sources or just to reduce dependence on any one channel. And there's equity versus debt. So choose between equity funding, which is giving up ownership in exchange for funds, and debt financing, which is repaying borrowed funds with interest. The choice depends on your business goals and risk tolerance. Legal and tax implications. So different funding sources have different legal and tax implications. You want to consult legal and financial professionals to understand the impact on your business. Small business funding is not just about obtaining money, it's about making strategic decisions that align with your business's growth trajectory and financial health. Each funding source has its own trade-offs, and the key is to choose the one that aligns with your business's goals, stage of development, and long-term vision. So let's dive deeper into the various aspects of small business funding. So there's bootstrapping and self-funding. Bootstrapping or self-funding is a common approach for entrepreneurs in the early stages of their business. It involves using personal savings, credit cards, or even revenue generated by the business to fund operations. While it offers control and autonomy, it can limit the scale and pace of growth, especially for capital-intensive businesses. And then we've got debt financing. So taking on debt through bank loans, SBA loans, or online lenders can provide a significant injection of capital for businesses. Debt financing involves repaying the borrowed amount plus interest over a defined period. It's crucial to have a solid repayment plan in place to avoid overburdening the business with debt payments. And then there's equity financing. So equity financing involves selling ownership stakes in your business to investors, such as venture capitalists, angel investors, or even friends and family. This approach is common for startups with high growth potential. So while it offers funding without immediate repayment, it means giving up a portion of ownership and potentially sharing decision-making authority. Alternative funding. So beyond traditional sources, alternative funding options have gained prominence. Crowdfunding platforms allow businesses to raise funds from a large pool of contributors. Peer-to-peer lending connects borrowers directly with individual lenders. These options can be more accessible for businesses that might not meet the stringent requirements of traditional lenders. So, investor pitch and due diligence. So when seeking funding from investors, a well-crafted investor pitch is essential. It should communicate your business's value proposition, market potential, competitive advantage, and growth strategy. Investors conduct due diligence to assess the viability of your business, including market research, financial projections, and team evaluation. Scaling with funding. So the injection of capital through funding can enable businesses to scale more rapidly, hire additional staff, and invest in marketing, expand product lines, and explore new markets. However, scaling must be carefully managed to ensure that increased operations align with increased revenue. Mitigating risks. While funding can provide opportunities for growth, it also introduces financial risk. So borrowed funds need to be repaid, and investors typically expect returns on their investment. Businesses should have contingency plans to navigate unforeseen challenges and ensure they can meet their financial obligations. Let's talk about balancing growth and sustainability. So when seeking funding, it's important to strike a balance between growth and sustainability. Rapid growth can strain resources and require additional funding rounds, while focused on sustainability might lead to slower growth, but greater financial stability. And then there's long-term financial health. Ultimately, the decision about which funding source to pursue should align with your long-term business goals and financial health. While funding can provide a boost, it is essential to ensure that your business's financial fundamentals are strong, including cash flow management, profitability, and a clear path to repaying any borrowed funds. Navigating the landscape of small business funding requires careful consideration, strategic planning, and a clear understanding of your business's needs and objectives. By exploring the various funding options businesses need, the various funding options available, and making informed decisions, you can secure the resources necessary to realize your business's potential and drive success. So let's just dive a little bit deeper into the intricacies and strategies surrounding small business funding. So there's funding for different business stages. Funding needs can vary depending on the stage of your business. In the startup phase, funding can be required for product development, market research, and initial operations. As your business matures, funding might be necessary for expansion, marketing efforts, hiring additional staff, and scaling operations. So tailoring your funding approach to your business's specific stage is essential. And then there's exit strategies for investors. So when seeking equity funding from venture capitalists or angel investors, it's important to consider their exit strategies. These investors typically expect a return on their investment within a certain time frame. Common exit strategies include selling the company, going public through initial public offering, which is IPO, or facilitating a merger or acquisition. Funding and growth alignment. So your chosen funding source should align with your growth strategy. Some businesses opt for a slower organic growth to maintain control, while others seek aggressive growth with the help of external funding. Ensuring that your funding approach complements your growth goals will prevent potential conflicts down the road. Then there's financial projections and investor confidence. So when seeking funding, having solid financial projections is crucial. Investors want to see that you have a clear understanding of your business's financial trajectory and can project future revenue, expenses, and profitability. These projections demonstrate your business's potential for success and can instill confidence in potential investors. Negotiating terms. So when entering into funding agreements, you want to pay close attention to the terms and conditions. Equity investments come with ownership stakes and potential dilution of your ownership. Debt financing involves interest rates, repayment schedules, and potential collateral requirements. So negotiating favorable terms aligned with your business goals is essential. And then there's diversification of funding sources. So relying solely on one source of funding can be risky. You want to diversify your sources of funding, and that can provide a safety net in case one source falls through or becomes unavailable. So combining equity and debt financing or exploring alternative funding options can provide a more robust financial foundation. Strategic partnerships and non-financial resources. So funding doesn't always have to come in the form of capital. Strategic partnerships, mentorship, industry expertise, and access to networks can be equally valuable. These non-financial resources can help your business grow, expand its market reach, and enhance its competitive edge. And then there's your business's financial health. So before pursuing funding, evaluate your business's financial health. Understand your current financial situation, including cash flow, profitability, and existing debt. Be transparent about your financials standing with potential investors or lenders, which can help build trust and credibility. And you need continuous assessment and adaptation. So funding needs and opportunities can change as your business evolves. You want to regularly reassess your financial requirements, revisit your business plan, and adjust your financial strategy as needed. Being agile and adaptive ensures that your funding approach remains aligned with your business's trajectory. In the dynamic landscape of small business funding, there's no one-size-fits-all approach. Each business has unique needs, goals, and circumstances that influence its funding decision. By thoroughly understanding your business's financial requirements, exploring various funding sources, and aligning your strategy with your long-term vision, you can secure the resources necessary to drive growth and success. And that's it for today. Thank you for watching SmallBiz Wiz. Today, August 28th, 2023, where business dreams take flight. Join me on a journey of entrepreneurial discovery as I unravel the secrets of small business success, from growth hacks and marketing mastery to financial wizardry and inspiring stories. My channel is your guide to navigating the world of small business like a true wizard. Get ready to conjure up innovation, cast spells of strategy, and enchant your way to prosperity. Subscribe now and become a Small Biz Wiz yourself.